Hello and welcome to Options Brew TV. I'm your host Lex, and tonight's special guest is Matt Amberson of Orats. Matt joins us tonight with 30 years of options trading experience, beginning on the CBOE in Chicago. He started Orats to support his successful market-making business. Orats gives traders access to more accurate and realistic option research. His firm caters mainly to the largest pensions, banks, hedge funds, and individuals, giving them access to proprietary options information, scanning tools, and backtesting. Let's welcome Matt out here and learn more about this. Really great product, really interesting. We got some good news here too with some integration. So Matt, come on out, man.
Hello.
Hey, how are you?
Good. How are you, Lex?
Good. Good to see you. I know I'm going to make a joke. We made fun. John Wick look. You didn't always have the long hair. Sorry, I did that.
That's all right.
It looks good. I love it.
We should have a vote later. The long hair or the short hair, Lex?
I'm just not used to seeing you like that. But great to have you, man. Your stuff is really unbelievable. So first of all, Orats, what it stands for something. Tell us about that.
Yeah, Option Research and Technology Services.
Okay.
We knew each other back on the floor, and what I would do is I would hire people, PhDs, mathematicians, statisticians, put them on a badge, have them trade, learn the business, and then come upstairs and calculate, what information that we really use and the best way to do it. So, and then we started Orats after I stopped market making, and that's been in business since 2001. So we've been here quite a long time.
Right.
We have, like you said, some large pensions, a lot of banks, and what people really like now is we've proven out a lot of our data with our back testing.
Mm-hmm.
And so the back tester is a life of its own.
Right.
Now what we're doing is then building, once you get a back test, then you can scan on it, trade on it, and we'll get into some of that a little bit later on with some actual graphics.
Great. So safe to say that you kind of started in the institutional side of the business, right? The bigger banks, as you said. Feels like we're making a little, addition to the retail side. I'm hoping you're going to say yes, because the folks today are big retail folks, and boy, what a great offering this would be for the retail side of the world.
Absolutely. And, as market makers, we didn't really know a lot about trading, just honestly about like going out and putting on trades. We were reacting to trades. And so a lot of this has been a learning experience for my trading. And I use Orats now every day. And so it's definitely now most of our clients that are coming in are retail or small firms. Lex.
Okay. Well, that's great. That's great. It's a nice product to have. And, safe to say that it's not easily done because of the data, right? Data is expensive. Is it not? And compiling data the way you've done it, you guys have done it at Orats is amazing. You just can't, work on a computer over the weekend and say, oh, look what I did. This is a big deal, right?
Yeah, great point. Just to prepare data for our back tester is onerous. I've spent hundreds of thousands of dollars getting our data right. And what that means is we have the smoothing technology that creates good Greeks, good theoretical values. And what that really means is what's the option really worth? And, we have to have good dividends and residual yields. I mean, a lot of things that people don't have to worry about, because when you're backtesting, you're simulating trading and you want to make it as realistic as possible.
Right.
So yeah, you bring up a really good point that's a lot of the time that we spend is getting the data right.
Okay. Yeah, that's important. It's the old adage, garbage in, garbage out, right? So if you're doing your job, which I know you are, man, that's the output can be fantastic. So
yeah, and definitely, because sometimes you can't just assume a mid-market fill. Some of these markets are no bid at $2 or something, and it's worth maybe 5 cents. And so we have that theoretical value that we can temper our back test with, and we get much more accurate results.
Okay, great. All right, we're gonna get busy in a second. I have one personal question. It's not really personal, but I heard through the grapevine that you did a little travel tour around the world and maybe lived, in Chicago like I was for the longest time, and the trading floor closed up and they put boards all over the place. And then you moved somewhere and you moved somewhere else. And that's what I heard. Is that true? And where do you kind of call home now?
How did you hear that, Lex?
I
That's
don't
good.
know, man. I
You
don't.
know
If you don't want to
everything.
talk about it,
I mean, you're such a good talker. Like you get the information out of people. Yeah. So we homeschool, and one of the years we traveled, went to started in Palm Springs, but then went to France and England and back to Bahamas, and my kids finally said, "Dad, I want a room. I want my own room."
nice.
So we were looking at Airbnbs for a while, and it was really fun. I mean, we're a remote office, and so the guys are great, and you know, John Kong and Jonathan Slew that work with me are just amazing, and
Right.
so we're able to do this from anywhere. You know, it takes a good team to keep one of these businesses going.
Yeah, no, that's great. That's good. I had heard that. I know. I think the source also said maybe a surfer. I'm like, wait, no, come on.
And so that's a deep secret. I grew up in
Got
Southern
I'm busting
California.
all your secrets out. Great.
My claim to fame was I beat Tom Curran in a surf contest when I was 16 years old.
No kidding. That's awesome.
He went on to be the world champion, but I went in a different direction because I knew how good he was.
Awesome. All right. Well, let's get busy then. So I think you're going to do, you want to share a screen? Let me tell the folks, if you have a question, there's a little Q&A deal down below, I believe. Yeah, just click on that if you have a question. You can type them in the chat. Andre, who's helping us out, will handle those. We'll probably get to questions toward the end. Feel free to fire them up though, because we will get to them all. And then the other thing is we'll probably throw a poll out somewhere along the way, quick 3-question poll, harmless, and that's it. So cool. All right, Matt, have at it. So tell us what we're going to do.
Yeah, well, one of the things that we talk about is what does a trading flow look like, and I like to start with backtesting. So if you don't mind, I'll share my screen.
Yeah, fire away.
And show you what is our backtester. So when you come in to wheel.orats.com, you'll see create new backtest, and we could go create a backtest. You could type any symbols or list of symbols. So maybe we'll do a SPY, and is it a bull strategy or a bear strategy? Are you betting on the market to go up or down? You know, and we have all the major strategies that you could use, but we'll just do a I don't know, a short put spread here. And then, when you're, one of the questions that you have when you're saying, well, what type of a short put spread should we do? It's, you often vary the days to expiration. So our defaults come up as 30 days with a min and max, and then our defaults come up with a delta. You could also switch it to out of the money percentage.
Okay.
So then what you do, you could just send that back test, and it'll show you, how you would have done had you traded this, since 2007. You can see how it did in the 2008, 2018, and the COVID meltdown. So that helps you get comfortable with the strategy, and maybe you like that strategy, maybe you don't like the strategy, and then you could vary the days to expiration, the deltas. We'll do consulting gigs for people where we'll do hundreds of thousands of tests on various strategies and try to find the best. So it might be, hey, the best strategy for SPY and a number of other ETFs is 45 days to expiration, and not 30 delta, but a 25 delta or whatever. And then you could also look at exiting. Do you exit when there's a certain profit and loss? A lot of people like to do that. Well, this could prove it out. I mean, people say, hey, I like to exit my strategy after I made 50%. And I say, well, why? Do you have data behind it? A lot of them don't. This will give you that data behind it. So what you do is you come up with this strategy, you press run back test, and you could literally do this for as many tests as you want. You could see that I have hundreds of tests here. I have hearts next to the ones I like, and then this one's running right now. So once you run the test, you get the results, and the results would say, how did the strategy do? This one did okay, 1%. And a Sharpe ratio is just basically the annual return divided by the volatility. So there wasn't much volatility here, as you can see in the graph below. And there's win rates, and there's a whole bunch of other things that people look at, drawdowns. And you can see how you did. This is kind of looks like hedge fund returns, every month back to 2007.
Okay.
Obviously 2008 was tough, and you can see that drawdown here. But you did all right in the rest of the years. And then it shows you every trade.
Right.
And you could
so is this assuming this is a short put spread? Assuming no adjustments to this, tell me about that. I mean, obviously you got to roll this out when it expires, right?
Yeah, so you could see that the first one we got into is on the 4th,
Okay.
and we exited it on the 16th. Both of the legs were 0. So we made 127 minus 49. And then we rolled immediately into on 216 the next one. So we're just rolling at the end of it.
Okay.
You're right, Lex. You could also, stagger this. We have delta neutral tests that you could do, but this is a good basic test where you're just getting into the next one after you get out of one of them.
Okay. So, and then let me just ask again. So once you do the initial scan, um, it gives you a suggestion of the strikes as well. And then in the new roll, does it give you another suggestion for which strikes to do?
Yeah, so if you recall, we were at a 30 delta with a min and max. Well, this one traded a 13 and a 14. I mean, sorry, a 32 delta.
Box it out for you. Go ahead.
Yeah. And so, these are pretty close to the rules that we gave it.
Okay, got it.
These will find the best trades. We have a scoring system, based on the target delta and the target days to expiration. So, yeah. So
and those are all inputs that you as a user can put in. You can put in, the delta of the spread, target profit, target loss, days to expiration, all that stuff. Something you as a user can type in and customize, as it were. Yeah.
Yeah, that's what I showed you at the very first.
Right, I got it. Yep.
Yeah, you're able to change all that, and absolutely, that's how people come to a strategy that they really like.
Got it. Okay, awesome. Good.
So
okay.
Let me just mention another thing, Lex, because you might not want to. You might have seen the drawdowns coming, in before 2008, for example. We have a charting package that shows the history of volatility, and once the volatility starts rising, that might not be a very good time for getting into a trade. So we could even trigger a trade to hey, don't trade when the volatility goes above 20, 30, and get back in when the volatility is falling or something like that. So you could trigger these as well, which is the way that I've tended to trade, to find the right option environments. And I do that using our charting package. And this charting package is basically a graph of our API. So this is all data that you can download and manipulate. But this is that's what I like to use for some backtesting.
Got it. Okay, great. Good. I love it. So once you come up with your trade idea, right? And clearly I saw a bunch of trades, right? I mean, there's tons of them. And I'm assuming you as a user can parse this pretty well and really hone it down to try to get, let's call it the little apple cherry sitting on the end of the branch, right? Hanging really low, and you go grab it and everyone's happy.
Right. So now what you're talking about, I mean, for our simulations, we're trying to find the one that meets your criteria the best. But once you start trading, you could go into a scanner. Okay. Mm-hmm. And then within that range, so this is a scanner of a short put spread for SPY. And, as you can see, there are, many tens of trades here.
Yep.
And, you could try to find the best one based on, we have a distribution, and we kind of explain it. We have a forecast of volatility.
Okay.
We have that smoothing value that I talked about.
Yep.
Where is it vis-a-vis that? I calculated this delta cost. It's kind of like, how much delta you get per dollar.
Yep.
And then, some deltas and such. So you could sort on all these and find the best one. Like, I'm partial to our forecast. So, this SPY D31st 352.42 would probably be the one that I'd look at.
Yep.
And when I say I'd look at it, if I press trade, I could see what the payoff picture is, and I could see, all the data for this particular trade. Mm-hmm. But I could also click on the link here, mm-hmm. and I could go figure out how it looks in a option chain versus other options around it. So there's a lot that you can do to kind of figure out what is the best trade. And here's the big new surprise, Lex. When you press trade here, you see this button here.
Yep, saw that.
That should be music to your ears. That's send to TradeHawk.
Would you look at that little guy right there?
Boom. So
you TradeHawk users, you hit that, and where does that baby go? So it's not on my TradeHawk. I know I don't have that yet.
Yeah. So So it goes to the room chat. Yeah. So
Oh, how cool is that?
boom, and it goes right into the vertical and it lines it up for you.
Yeah,
So
and then off to you make your size and off to the trading races.
yeah, and
Nice.
yeah,
Oh
I've been
my
really
God.
into it. So it's a full integrated system. From back testing to scanning
Yeah.
to checking out for entry triggers on the charting. We even have some position management
Right.
coming, and so it's a nice little system here.
Right. Oh, that's awesome. So in terms of this the spread configuration, so you have a put credit spread here, I think.
Yep.
Can you is it a library of spread choices that you give, or can the user be kind of custom in terms, like if he wants to do a 7 by 5, and by 3 or something like that? Can a user do something like that?
So in back testing, one of the things that you could do is combine back tests. So let's say you have a long put
Yep.
and a short put.
Okay.
You could say, okay, I want to back test. I want to combine those.
Okay.
And what's my weighting? I'm going to do 7-1 or whatever you said. And so you could then back test
Okay.
based on having more long puts than short puts. That's one of the things you could
Got
do.
it.
And then
Okay.
of course, when you're trading, you could just size it up as you want to do. A cool thing that we have, so we have a lot of different off the shelf strategies,
Mhm.
but we also have the back tests that you put in there. So
Yep.
if you put in only trade the short put spread when the IB percentile is greater than 50, I'm just throwing that out there.
Yeah.
You could select that, and it'll only show the symbols and the options meeting those criteria. And then you could also overwrite it. You could say, instead of 30 days, let's do, 40 days, minimum 30, maximum of 60 or something like that.
Right.
You could actually set a drift. If you think the stock's going up 5%, you could put, 5% in there.
Okay, so explain that. That's not a common term. We know what it means, but give us a quick definition of what the drift means. That's just the slow grinding of the stock, the underline itself.
Yeah, so it's going to find the best options, the best theoretical values,
Yep.
assuming the stock goes up 5%. So, you could find, if that comes to pass, here are the options that we think are going to do the best. And that, obviously in this case, it would be the higher delta ones, but that's
Right.
that's what that does.
Got
And
it.
let me just point out one more thing. You could also overwrite the delta. So right now, I think we have 30 and 15, and if you put 0.1, it'll be 40 and 25. So you could, if you want more in the money, you could adjust it. This is just a quick way to adjust, the scans that you're seeing here. So it just makes it easier to utilize.
Okay. Very cool. Cool. So, clearly a great tool for idea generation, right? So you might have a thought on, how the SPY might behave or how IBM might behave, and then you can go here and create the strategy that takes advantage of those ideas as a user, right? And your machine does the heavy lifting, scans all this stuff, finds the best possible spread option, combination of all the above, right? And then boom.
Yeah, absolutely. And then, so you could have your outlook, and then, go scan, based on SPY. I just click long call, short put, long, and you look at all these, results that you get.
Yep.
And then you could sort them by, what's the best forecast, and that, selling this put is the best in this particular output, where you're, from our forecasts.
Yep.
From smoothing, it's another short put, where we're drifting up 5%. So, what is going to be the best strategy? And I just picked those randomly, like those are just the first 3 bullish ones. So obviously the bullish one's going to work the best, but risk reversals, back spreads, and
Sure.
way out of the money. So yeah, it's very neat. Once you have an opinion, this will go out and help you find those best trades based on that information.
Okay. So yeah, one of the questions we're getting is, can it scan randomly for a universe of underlying stocks, or do you have to pick the underline and then do your scan?
Yeah, so you could type in, Intel, Apple, Microsoft, and you have your list, and you could copy that in here, and you could see that it came up. So you could, I've had hundreds of symbols in there. So yeah, you could, you could do that from your
and get several different
list.
symbols, right?
Yeah, definitely.
Got it. And
So
and when things come up, they come up. The top row is the most favorable. Is that the idea?
Yep. So
Okay.
and I'm sorting, like, we have this distribution that, that looks at, okay, over the last 10 years, here's the distribution of Microsoft returns.
Yep.
And if that happens again, then this particular short put, is -4 here and -3 here, and
Yep.
and it values it based on the distribution. So that just, we just have a few different ways to compare these options to one another, and try to find which one's the best one for, in these various scenarios.
Okay. Great. Very
So we
cool.
like this, we like this Apple short put, and again, you could take a look at it,
Mhm.
look at it in the chain, send it to TradeHawk, look at things there,
Right.
a lot of different things.
Got it. So when it picks just a straight option like that, does it take into effect skew and kurtosis and all those fancy terms at all, or any of that included in the on the back end of it?
Absolutely. I mean, so I'm now in our option chain, all the different dates, etc. So what we're doing is we're creating a theoretical value, and you can see that these theoretical values are within the bid-ask spread most of the time. I think all the,
Yeah, let's slow down a little bit. I want to show that. So you just pick a spot. I'm going to highlight it. So if you see where his cursor is, he's got the red lit up in the green. The theoretical value Matt's alluding to is this middle column right here. So that theoretical value is computed by Orats, correct?
absolutely,
And
and
it's sorry,
yeah,
it's not necessarily the midpoint of the bid ask either.
nope.
So it's a lot headier than that, a lot fancier, but a lot better value, I'm guessing.
Yeah, you know what happens, Lex. When we were on the floor, you start pushing one option if there
Yep.
was a lot of buying going on. Like here, this one traded 500 contracts,
Mhm.
and it looks like it's a little bit out of the skew here. It looks like they were selling it. So that one's actually outside of it. So this is offered at 1280. We have it worth 1286. It's a 51 mid or 50.1 mid. So that's the one I would buy. You know what I mean? Like, so
Sure.
that's this is one that has a lot of open interest. It looks like people have been selling it.
Yep.
And so, yeah, it's a little bit under.
So yeah, and one of the things that we traders did, so you can see where that value is. Okay, and again, I'm going to ask you a question about the theoreticals in a second, but you can see that his value, and that's that middle box right there, is a little higher than the offer of the stock of the option. Correct, 1286
Yep.
value, 1280 offer. Everything else sort of lines up around it. And the reason Matt said what he said is, hey, wait a minute, lots of option activity, lots of open interest. Okay. Values lower. So they must be pounding the heck out of us. Guess what Matt and I did in the day when they pounded? We lowered our price. And in the old days when we were down there, we didn't have computers to do all the prices. We had to do just one option and things got out of line, right?
Yeah, and if you notice, this is only 20 cents wide. The other ones are $1 wide or
Right.
more. And so and so I would say that this is an offer, and that that would look good on
Yep.
to buy in my estimation.
Got it. Okay, good. So
Anyway, just to answer your question,
yeah,
Lex.
go ahead.
So one of the things that we do is summarize the skew here, and we do that, drawing a slope through it, and then we forecast the slope. So we forecast the entire surface.
Okay.
And so that comes out in our forecast ball.
Yep.
So when you say, is it considering, the time skew and the strikes by strike skew, the answer
Yep.
is absolutely it is. We do a lot of work taking out earnings and then putting it back in. So it's, all our months kind of line up with the earnings month. So, it might be 4 or 5% different in some stocks.
Yeah. So, okay. So that's a good point. And I want to just emphasize that the earnings part. So we have implied volatility, let's call them disruptions pre-earnings, right?
Yep.
And I think what I heard is that your data has the ability to remove those disruptions that can be events that cause, skewness in the data. You can pull those out, put them back in. Yeah.
Yep.
Okay.
So I'm just going over the chart real quick. And so I have uh, ORAT's implied volatility X earnings 20 days.
Okay.
And I have just the implied volatility with earnings in. And this is kind of cool. You could drag them over each other and it does a ratio. So you could see when, bang, 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 there's earnings, bang, 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 there's earnings. You could see that that earnings date and then the vol crush afterwards, which is
Yep.
the implied volatility. And it's not only just the implied volatility on its own coming down, because sometimes the stock gets volatile, but the implied volatility X earnings divided by the implied volatility with earnings in it shows you, really how much they're crushing vol after earnings.
Yep. Right. And I'm assuming this is another question, but I'll ask it now. I'm assuming there's ways to predict earnings movements with the system, other than the standard ways that you and I know.
Yeah, actually, so I mean, here's Apple again, and what we're doing is we're looking at all of this information, X earnings, implied volatilities. This is all calculating almost in real time.
Yep.
And then one of the numbers that we get is the implied earnings move that's from the option prices.
Yep.
But we also have a way, as you mentioned, we forecast what that is. So we'll say, wow, Apple's much higher than its past moves. We forecast it using past moves, et cetera. But
Right.
yeah,
Okay. Yep. Go ahead. Sorry.
no, but you bring up a good point. I mean, looking at earnings and ORATS does a lot. We have reports and so we do a lot with earnings. It's almost its own topic, but
Right.
suffice to say that is built into our forecast. That is built into our X earnings manipulations that we do, like that we're pointing at.
Yeah. You mentioned the word forecast a lot, so I think that's an important feature, right? So when you get into that world, now all of a sudden you're taking historical data of some sort and you're predicting the future, right?
Yep.
With some good variables that history has shown. When we traded earnings, I guess, we could look at that. I suppose we had a pretty good thumbnail as just traders knowing your product, but nothing like this where it's very quantifiable and quantitative. So this is powerful stuff, right?
Yeah, so I should mention another thing. So also our historical volatilities, which is a Parkinson measure. We also have close to close. If you don't know what that means, not a big deal. You can look it up, but it's just a more accurate way to calculate historical volatility. It uses the open, high, low, close a lot more. But this is X earnings. So we forecast based on an X earnings movement of the stock. So we try to calculate, how much is Apple going to move over the next 20 days. If there's an earnings in there, then we'll forecast that earnings move. And so it just gives us another look. I mean, like a lot of times you're like, I don't know what my theoretical value should be, but right now, we have those types of forecasts in there.
Right. So let me ask you another question. This is heady stuff. Okay, this isn't exactly, hey, I'm learning how to ride my bike. Can a newer options trader take advantage of this? What do you recommend? Obviously, he's got to be able to learn how to buy a call, sell a put, buy a vice versa. What is there 101 version?
Yeah, but everyone knows the concept of what is something worth. And so just because you and I know the weeds, we tell you, hey, this is what we think it's worth. Here's what it's worth on a smoothing mechanism. Here's what it's worth on a forecast mechanism. And your job as a trader is to say, okay, well, here's my outlook, and here's where I think a strategy might come in. And you could just again merely go in and plug in your stocks that you're interested in and find the strategies that you want, and then start to look at some of the valuations that we have in there. And it just makes you a much smarter trader. It gives you a lot more data. This is really kind of the next level for a lot of people.
Got it. Okay. Awesome. Let me ask a few questions here. Any assumptions about execution, entry, and exit? You know, so obviously that goes back to your point about the width of markets, no bid at $2. Are those built in?
Yeah, that's a really good question. And if you go to our docs.orats.io, you'll see our backtest API guide and our methodology. We have slippage in there. So what we do is we've studied millions of trades, and basically what we've come up with is for a one leg trade, we estimate a slippage of 75%. What that means is if the market was $1.20 at $1.40, you'd be buying it above the mid price for $1.35, which is 75%. And if it's two legs, it's not going to be 75% because the market gets wider and wider as you're adding these market with bid asks there. So then it's only 66%. And then for a three-leg butterfly, for example, it's 56%. And for a condor, it's only 53% is kind of our assumption. But, of course, the markets are really wide. You're still giving them, meaning the market makers, a pretty good edge. But, these are the assumptions that we use. And the commissions you could set, but we just use 1 cent.
Okay. Got it. So all that's in there.
Definitely in there, baked in.
Okay. Fantastic. Okay. Another question. Do you have option volume history?
Yeah. So, let's just say this is an Excel sheet that goes and hits our historical volatilities.
Yep.
Remind me to talk about ETF components in a second, so I don't forget. So on a 10/1/2020, I don't even know if that was a trading day. So I could go in and go find that data.
Yep.
And go, it shows the volume, the bid ask going out. And so, yeah, we have all that type of information, including implied volatilities. Here's our theoretical values,
right?
All the Greeks and our forecasts.
Okay. And if you're fairly handy with Excel, you could graph this and that sort of thing, or does the software?
Yeah, but I mean, I think people could understand that, if you're Python or whatever, you could go get all the stuff automatically. So, and like I said, our docs at .orats.io has all this, all the information on how to go get all that. And, people have built some pretty sophisticated stuff using our data APIs.
Okay. And all that's available on your site that Andre put in the chat. So if folks are technical and codey and can do that, they can, work something out.
Yeah, let me mention one more thing. Just
Sure.
What's so awesome about Tradier is they've made us their technology firm for live data. So we calculate all this data live. So you could come in and see where the market is right now, and what all our theoreticals right now. When we were looking at this chain earlier, this is updating all through the day. So you're going to be able to see this, and and we're just a client of the API, meaning we're going and getting it from this API endpoint. We're all in the cloud, and it's fairly fast and robust.
Yep.
So people could have access to that and make some pretty incredible things now. I think it's Lex, when we started trading, there wasn't anything,
right?
And now it's just amazing what you get at.
Okay, so I think that answers another question. Is the viewer asked, how can I get access to the software? So this is the way, right? Orats.com, and then we work through it.
If you go to orats.com and we have trials and pricing and all that stuff. So you could, there's a lot of information on here. Okay. And contact me, Matt at Orats, MATT@ORATS.com. I give demos just like you do. Lex, you're the hardest working person in option, and I want to be second.
I don't know about that, but we try. I launched a little poll out there for the viewers. So if you would, super easy, just information. So I'll leave it on for, a few minutes if you don't mind. I don't think you have to type anything. You just have to make choices. So have at it if you will.
You have the question whether I should have the long hair or cut it on there?
Well, someone asked about the ponytail, man. Where's the ponytail?
There's no ponytail, no man buns.
All right, another question. Ready? Can you manage positions? And the viewer asks, like, sell a triangle and roll the particular leg out. I'm just going to read it at the credit. If the stock price is testing at a certain delta or percentage, moneyness, etc. So I guess the the paraphrase of that is, you put on your strangle, roll it out based on some criteria that you
Yeah,
back test or scan, and then come up with a new solution.
yeah. So definitely. So so let's just say, like say you're in a back test and you do a spy straddle, which I had on,
Yep.
and it's a long straddle, in 30 days, whatever, 40, 50 delta. So I think what he's saying is if it gets challenged, if one leg, or if the absolute delta of this thing goes like, min max of, 60 or it goes below 40 and it goes above 60, then you roll out of it. So the answer is yes to that, or if you made a certain amount of profit or whatever. So then you run that back test. But the really cool thing, Lex, is once you have this back test on,
Yep.
The back test IDs travel with your position. So it will say, hey, it'll give you a flag to exit this. It's violated the, because we're continuing to monitor these four exits. So this is how the trading goes. You monitor these particular trades in there for exit based on profit, based on delta, based on a lot of things.
Okay, great. Very
Pretty
cool.
amazing. Yeah, and that's pretty amazing. That's a really good question too, because that's the hard part about trading options. Is like, when do you have time to go look at this? Well, what Orats we show you, and we're even building a position that will automatically trade, and that's a little dangerous, as you know. But as I've been using this, I'm confident in it, and we have good theoretical values, and we have a bunch of checks in there. So I'll roll things based on an automated basis based on this.
Right. Got it. Okay. Let me read through questions. A lot of them here, so I want to make sure I'm getting them all. Time intervals that you can break the data down into. Does that exist?
Yeah. So we have snapshots every minute. I think that's what the person's asking. So if you want to look at 1 minute snapshots, you can. Our back test is only on the near end of day, 14 minutes before the close, since we go all the way back to 2007.
Okay.
It would just take way too long. But we have access to 1 minute snapshots that people could build their own, back testing library out with. Yeah, definitely.
Okay. How about back testing based on other Greeks besides delta? Can you do, Vega, Theta, whatever?
So we don't have back testing based on theta. We just haven't had that many. We've been doing this for 10 years. We just haven't had that many requests for that.
Okay.
But you could trade based on almost anything. And a lot of times, you could say where the volatility goes. For example, you could say, I want to get out when the implied volatility or the IB percent tile is 50 or greater. It's percentile goes from 0 to 100 in ours.
Yep.
But there's a lot of ways that you could trigger trades in there.
Okay.
And come close to what you're. I understand what the person's talking about, but
yep,
for back testing, it's a bit much for at least our clientele.
Got it. Okay, good. Let's see. IV history we talked about. Are you calculating spread returns based on the notional underlying cash secured, or are you doing it on the option premium?
That's another really good question. So so I'll go back to my back tester here. You could choose which one you want to use. You could choose.
Okay.
You could choose either notional or on margin. So I usually run it on notional, meaning if I hold the stock, what's my return? That I find is easier to compare to different strategies, because the margin, as you know, for various strategies can get a little bit wonky, like for long calls versus short calls. I mean, it's so different. So yeah, notional versus margin is how we calculate it. And we calculate simple interest, but you can put compounding in there. But compounding, we used to have compounding, but it gets really difficult when if you have a position like a long put that goes below 100%. When you're simulating it, you can't compound anything. So we generally use notional, which is stock price, and generally use not compounding, just simple interest.
Okay.
Yeah, good questions.
Yeah, great questions. Okay, good. And then any thoughts on when it's going to be available in the Trade Hawk room chat? Probably coming up, right?
Yeah, so I mean, I'm testing this in a development environment right now, but
Okay.
if someone was interested, we could get them up and going pretty quickly.
I'm going to be the first tester. You know that, right?
Yeah, you got it.
All right. Awesome. Well, this is great stuff. And then one just came in, another question. So I think you mentioned earlier, and I think that's what this question refers to, is if someone is code worthy, they can have a business relationship with ORATs to gain this data and build something that they would use for themselves. Is that correct?
Absolutely, and we have good information here. You could do a back test. Like we had someone come in. You could just hear examples, JSON APIs. If you're programmers, all this stuff. You could go on. We send you a key, and you're off to the races on downloading data, back testing, all the stuff.
Okay, awesome, man. Great. Well, Matt, this is super interesting stuff. I'll tell you, this is where the big boys kind of roam, I think, and for your firm to be, pushing this out to the retail world is big time. So this is exciting.
Yeah, that's one of our missions are to get the institutional information to just regular traders like me, like you, like everyone listening. And this is what other people are using. It's not going to get much more involved than this. And so you really have at your fingertips, you have access to a lot of the things that big boys are using.
Yep. I'm sorry. Is there any time frame Orats will be integrated to Trade a Year? I think it already is, right? That's the answer to that.
Yeah, and then and by the way, if the question is, are just going straight to the Trader API, we're already testing that. So
okay.
And we also have monitors to check to see it on your fills, and this is against the Trader paper trading. So
yep.
You just turn it on, and you could send these to the market.
Oh, good. Okay. And you did mention a little bit of auto trading. Let me make a little point about that. I mean, auto trading, I think what you mean, correct me if I'm wrong, the user will define how the auto trading works. So he'll put the inputs in, and then if those inputs are met, it could execute a trade. Is that kind of the concept there? Auto trading can be kind of scary. I just want to clarify that.
Yeah. So yeah, this is definitely the advanced stuff, but let me just go through it real quick.
Wow, that's Cody, Matt. Holy cow.
I know, but you don't have a heart attack. We're going to step you right through it. So, we say things like, okay, how many trades, this is setting up the rules for an auto trader. Okay. So how many trades just won? How many trades per stock just won? How long is it going to be in the market? 20 minutes. Mm-hmm. And so what this is saying is if the Nov 27, this is a little bit old, call,
yep.
With the stock at 166, we snapped it at 119 at 175. I want to buy this, so my ratio is 1. If it goes below 124.9, so if that ask comes down, we want you to trigger a trade.
Okay, trade where? Does it say that?
Well, you trade any place below your trade option price.
Okay. So someone and they would the user would have to write this code. Is that correct?
Well, yeah, we would work with you to put this in. And again, this is very much in the testing phase, but this is next. This is really next generation for trading.
Got it.
I know I want to trade this, but I only want to trade it if I get a really good price. Lex, like we would have loved this kind of the raised bandits and stuff that when we were.
Oh yeah.
That's what they were doing. They knew where they wanted to trade all these things, and they would put their assumptions in, and then if it hit, you would send a trade automatically. And we've been testing this, and it's been working pretty well. So it takes it's obviously you have to be very cautious. You're sending live trades out there, but it is kind of the next generation.
Yep. Very cool. That's awesome. Okay. Very good. Very good. All right, Matt, that was terrific, man. That is great stuff. This this is another level. I got to be honest. I mean, this is what we were, we kind of had some exposure to in the professional days, I'd say. And not even, this was the latter part of my trading career. We were in the algo business, right? So I'm a little used to this, but boy, to be getting this out to our retail friends, this is heavy duty. I love it.
Yeah, and I'm a registered investment advisor. So if you want to talk to me about some things, but my advice is always test it, find your niche,
Okay.
and then stick with it, and trade it small, test it out, and see how it works.
Awesome. Okay. Last question, and I'm gonna let you go, man. This has been a while, so it's been awesome. Support. How's support with ORATS? How does that all work?
Yeah, definitely. We have 5 people working for us. We're all capable of supporting it. Like you, Lex, we get back right away. I like to handle as many as I can. I give demos. The guys are working hard on, you can imagine all the work that it takes to keep this going, and we're in all the building we're doing. So I like to just manage things and help people learn how to trade options, Lex.
Awesome. Okay, good. And that's all on the site, how they get a hold of you, I'm assuming, right?
Yeah, matt@orats.com.
Well, that's really very easy, isn't it? All right, I'll tell you what, I'm gonna take your screen sharing away so we can see the Keanu Reeves, John Wick look better.
So how did the voting go? Leave the hair or cut the hair?
I didn't even have that question. I wish I did, man. But when I first saw you the other day, I'm like, oh, come on. I love it.
Oh my God, I'm getting my balls busted if I could say that on my TV.
All right, great. I'll follow up with you after this, but we're going to end it here if that's okay. Thanks so much. It was awesome. The show will be on Options Brew TV YouTube website tomorrow. We get to do the editing because that's just how the world works nowadays. We have to do it that way. But yeah, the people can go back and refer to this. Send it to your community. We'll send it to ours to go visit it, man. Great show. This was really, really interesting stuff. I think people are going to really enjoy this.
Great, Lex. I really enjoyed it, and great questions too. So thanks to everyone for coming.
All right. I'll talk to you, Matt. Bye.
Bye.